Hey, Alpha fam. You guys are doing good today. Guys, we did see a big dump in the market. Of course, the market was not reacting well at all to stronger than expected jobs, but with actually lower hourly wages. And then, of course, Powell came out and said that, he's basically going to wait and see, right? So he's not going to stimulate the economy right now. He's going to wait and see what happens with these tariffs because they were stronger than anything that the market could imagine. And the way that they were calculated was actually quite strange. Okay, if you go into the details of it, there's some sideways math involved. The tariffs are not reciprocal at all. They are actually extremely punishing and disproportionate to what the real tariffs are in place there. So, from a certain perspective, you could say, well, that's a negotiating tactic. You come in with strength, right? You negotiate with strength. You don't want to negotiate in weakness. And that's a valid perspective, only if you assume that the goal is to actually get those tariffs down, and that you're not just going to reduce them just a bit, but then leave them at the levels that the market expected originally, because then they could become permanent. And the reason why, I suspect that Trump may have a plan to just try to leave as many tariffs there as possible and as high as possible is because he's stated openly that his objective is to bring manufacturing back into the United States. He said it in a number of ways that he still wants the dollar to be dominant in the global system, but he wants a weaker dollar. And so, these strategies that he's using through tariffs are actually going to weaken the dollar. And I'm just not sure that everyone who's saying that this is a negotiation tactic, while sure for some countries that might be the case, maybe some strategic countries that he wants to work with. In general, I think he likes having those tariffs there because in the back of his mind, he's also looking towards policies of, potentially reducing the IRS, some type of a dream by his supporters for many decades. And then also, he wants to do a huge tax cut to basically billionaires, okay? And what that could result in is that if the billionaires get like this quote-unquote permanent Trump tax cut, which dramatically, disproportionately benefits, just really ultra millionaires, like those hundreds of millions of dollars. And the billionaires, because those tax cuts, they really don't have any relevance for the middle class or below. It's a couple bucks, but it's not going to be offset by, it's not going to offset tariffs, okay? So if your costs are increased several $1,000s a year because of tariffs, a couple $100 or even $1,000 of a tax cut if you're in the upper brackets of the middle class, it's not going to amount to much, okay? It's not going to even cover the tariffs. But what the tariffs, the excess of those tariffs are going to do is they're going to pay for the tax cuts to the billionaire and ultramillionaire class. And then as the market hits a bottom and the tax cuts come in for them, what they're going to be able to do is scoop up all the stocks for dirt cheap, right? Because you've crashed the market and you've given a tax cut to your buddies, and now they can afford to just buy up all the stocks. And that's what we call a transfer of wealth, right, from the middle class to the upper class. We've seen this happen before. It happened during COVID, which was also under the Trump administration. I think he likes this. I think he wants this to happen. I think it's payback to his buddies who helped keep him in power. And all these guys are politicians. We do not have to look at them through rose-tinted glasses. They are doing certain things to support certain demographics. And we have a history to measure in terms of where we think this can go. So I think the majority of these taxes, even if they get whittled down a bit, a lot of them are going to stay. And probably we're going to see something kind of in the middle of what I just described, where, tariffs come down a bit. Maybe they don't get as much tax cuts as they'd like. And, we're just going to have to deal with this a little bit more of inflationary pressures for longer. And what the Fed is saying is that they need to see how this plays out. So unfortunately, the Fed can't come in and rescue the middle class right now from losing their 401ks, from having to panic sell their stocks and all that stuff, right? Basically giving up those futures that they worked so hard for. There's going to be no rescue, okay? And this was a self-inflicted wound, so it's not like we can say like, well, this is the market, self-correcting. No, this was a direct result of the stimulus starting back in that COVID era during Trump 1. And this is also a result of the tariffs in Trump 2. And so this is a completely man-made cycle that's going on here. It's completely engineered from top to bottom. And the rescue is going to come in time for the ultra wealthy class, right? It's not going to come in time for the middle class. Probably we're going to end up seeing a recession. If we go ahead and take a look at stocks, you can see that we've dipped down greater than 20%. Okay, if we close the day like this, which it looks like it's closing, right? So we're going to close more than 20% down. What is that in the stock market? That's a bear market. Okay, so we are officially in a bear market in terms of stocks. And what you can see during bear markets is you have to put in a couple months to make a rounded bottom. All right. Let's take a look at what was the max pain here on this last drop. It was about 40% down. Okay. So, that's a, there could be more pain to come. So you see I have an extension perhaps down to these lower levels on the KUCOIN, which is the NASDAQ, right? This is the Series 1 trust, but basically it's a good stand-in there. So the KUCOIN is suggesting, that, if we need to round out a bottom because we're going to put in a market bottom after having just put in a market top, then this could take months. These could be the months that Powell is observing the market. And as he's observing the market, then maybe we just kind of slowly build strength. And at some point he comes in with stimulus, maybe towards the end of summer, maybe the middle of summer, not quite sure. But he came out today publicly and he said he's not ready to make a judgment on it. And usually the Fed needs about 3 months of data at a minimum. So we can kind of target 3 months from now, maybe 2 to 3 months, because we've already had about a month of data. And so that would put us somewhere in June to maybe July, where the Fed starts realizing that they have to catch up with this official bear market. Okay, 20% down in stocks is a bear market. Now that was the KUCOIN. We can take a look at the SPY, and the SPY is also 20% down, or just a hair within range of it. It's about 17.6. So that's extreme correction territory. It is almost about to hit 20% down. And again, if you need to make a rounded bottom because you just made a top of the market, then you would expect that this would take several months to repair. Okay, it's highly unlikely you're going to get a V-shaped recovery without the Fed intervening. And if Jerome Powell came out today, which he did, and he said that he needs more time to see what the tariffs are going to be in the long run, then that suggests that the Fed wants to take, a couple more months to observe. And again, it's because of that lack of clarity from the top there in the administration, where they're not, being clear if this is something that they are just negotiating in the short term, or is this something that is actually a strategic long-term position in terms of their tariffs, so that they can afford to pay for tax cuts for billionaires, or so that they can afford to start reducing the IRS and maybe some of these federal income taxes, which the only way you could get rid of federal income taxes really, just forget about which class it's directed to primarily. The only way that you can get rid of federal income taxes is by replacing it with something else that's going to be long-term stable. And I believe Trump's philosophy is that that can be tariffs, okay? And that he can bring back manufacturing to the U.S. by making the tariffs long-term. Now, if Congress doesn't play ball, or if this just ends up being kind of a botched operation, because it's going to play out over months. It's not like it's just this one day, right? And obviously Congress has their say, right? And the courts also have, some say. If this ends up being botched or not going through the right way, then it can all just be compromises upon compromises. And again, we could end up in a stagflationary environment where the tariffs persist. They are a long-term inflationary pressure, and so the Fed cannot cut rates to get us out of a recession, and we're just going to be playing whack-a-mole with a recession and the bear market and inflation due to these different policies without any real clear objective coming together and forging it all together. Now, at the end of the day, I do believe that these guys will get their policies lined up, just like hurdling cats. But again, it may take a few months, and I'm not really expecting a V-shaped recovery. I am expecting more of a dead cat bounce, perhaps to fill in some of these gaps you can see on the market, right? So if we do bottom out and then we start to bounce back up, I think that could be a dead cat bounce on the market. If crypto takes advantage of that and has a very nice spike, into the end of the year, that would be fantastic. But my expectation is that it would be one of these type of relief rallies, right? So that we see something like this. Let's just say we come down a little bit, and then we make some type of a dead cat bounce, and then we start rounding, right? Put the fear of God in the market. Some policies start shaping up. Congress starts cutting taxes, right? Some of those tax cuts come in. The billionaires use it to buy back stocks. They're buying back stocks while they're dead cheap. And then over the course of months into the end of the year, finally we have just a mega rally, which may then end up in a blow off top on the market or a lower high on the market. We don't know exactly. But then we may get caught in a stagflationary environment where if you zoom out, this chart may need a bigger correction, and we could even come a significant level lower, right? So that would be the last hurrah towards the end of the year until we end up in a recession, which then the recession, it may take a while. It may take a year or two. You never know, right? I think on average is something like 6 months, but depending on how intense that recession is, right, it can last a while. The markets can remain repressed for a while. And, you're likely to see those guys who got their tax cuts in 2025, who bought up the bottom and resulted in a blow off top or a dead cat bounce. They're going to be selling, and then they're going to scooping it up at ultra low levels if we get those bigger corrections. Now, I'm not saying that is going to be what happens, but if you take a look at this chart, I mean, it's obviously, in range for a big correction coming down the line, unless we're just going to infinitely money print. And my assessment of the market is that they're not ready to just do infinite money printing as much as they were before. Okay. So, we can go ahead and consider, what this might mean just in the short run. If we do find support in the next, in the next couple weeks off of maybe this, let's go ahead and jump to the weekly here. Off of this 21 EMA in the stock market, off of this diagonal in the stock market, okay, somewhere between this 500 to, 500 to a 480 kind of area, where we might start seeing a bouncy area start forming. And if we go to Bitcoin, Bitcoin's been holding up pretty strong. However, we are making a bit of a rounded structure here, and you can see that we do remain under the weekly 21 EMA. And eventually, even if we go to the daily, if we're just ping-ponging between the 200 daily EMA and our support here, eventually we're going to break that support down, and we're going to start doing the same thing with the 300 EMA. And my concern is that if we don't get above that 85,000 soon, and by the way, you see this 200 EMA is actually pointed down. The 21 EMA is pointed down. This is still bearish, okay? They do not have any type of positive momentum to them. So really, we need to get at a point where these things start curving sideways to up, okay? And that's going to be around 86,500. It's not 85,000. It's 86,500. And above 86,500, we're going to have an upward curvature, which could have that suggestion of a pop to the upside. I'm really not interested in this market in terms of this low until we see that positive momentum really coming into itself, which would be above 85,000 at a minimum, and then preferably above 86,500 on a breakout, which then comes back down, makes another higher low or makes a lower low with a bullish divergence, right? And then quickly pops back up there if we are going to continue to play this game. And then we're going to be looking towards those lower 90s. But I do need to see probably a higher high above 89,000 as well, okay, at some point. Either the breakout or the one right after the breakout has to break above that 89, and I'll give this territory some consideration. But if the stock market is going to go into a bear market, which it, you know, which the QQQ, the NASDAQ, is doing, then we have to be on guard that this could be a false accumulation here, and that, you know, BTC could be a little bit delayed. Sometimes it follows the stock market, sometimes it leads the stock market. They're not one-to-one. And that it may also follow the stock market on one more ping to the downside. That could bring us to the 70s or the 60s area quite easily in this current configuration, where our volatility wave, even if we only come 50% down on that volatility wave, actually that makes that $70 area, that $68,000 area, that makes it an interesting spot for just a, you know, these are full waves. And then this is a 50% wave to find some strength, and maybe a little deviation or something, but in a bear market on the stock market, while the stock market finds its bottom going into summer, this would be a very interesting area, okay? And then, you know, these things will be going sideways, and then we make the big squeeze through both of them, okay? That's essentially what we did down here, okay? You can see this little baby wick. You can see this chunky price action right here. And really, you can see that over on this side, we've never had any price action underneath the 300 MA. This is the moving average, not the EMA. We've never seen any price action under the 300 MA, and we've not once, not twice. Okay, so I'm a little bit superstitious about some of these patterns, and I'm really open-minded that we're not really at the discount levels just quite yet in bear market conditions, in kind of recessionary conditions that big players would like to scoop this stuff up on. Okay, I think that they would much prefer these lower levels, but I am quite open-minded, right? As long as we're pushing against resistance, I am open-minded to looking for that breakout that then creates bigger structure. And I'm also going to be painfully aware that even if we do get that squeeze to the upside, in a temporary relief rally, we could end up just making a longer back test of this diagonal, which sometimes happens during impulsive moves to the downside. The breakout and the back test can also be quite deep, and then we get that V-shaped recovery. Perhaps when Congress comes in and cuts taxes, and then all the billionaires are buying up the stocks, right? That's going to create a buying opportunity for billionaires. Because what else are you going to buy, you know, in a recession, right? In a bear market? Well, you're going to buy up all the cheap stocks, right? If you're a billionaire, you're going to just start buying them up. They're going to be on ultra discount for you. And if stocks are on discount, I'm not sure that crypto is going to necessarily be the priority. So, again, I just don't know what the order of operations is right now. And also, is it going to be the really risk-on assets like the altcoins? I'm kind of doubtful. Like, I think these guys would rather, you know, use their tax cuts on, on cheap stocks and things that might, maybe build manufacturing in the US. I don't know, right? They might want to be just coming in and buying the cheap stocks before they buy altcoins. Okay. I'm not sure, but we'll find out. And so while Bitcoin may hold strength, we just don't know what's going to happen with the altcoins. Now, everything is oversold. So I would expect, some type of breakout to want to happen sooner than later. It's just, it doesn't have to happen, right? It doesn't have to happen. And the news that that Powell gave today was not very encouraging. All right. So we'll have to just continue to monitor that and monitor the macro. We can do another macro update on Sunday. What I'm concerned is this is going to roll over. Okay, that would be my big concern. And so we're still going to keep that short scenario open just in case. Let's see, I had a short here. This is what I gave to the group. And right now we're coming back to our entry, but we're really not, we're not like invalidating this setup or anything. As long as we're underneath this diagonal, and as long as we just kind of chop down and grind under this diagonal, then we still have the opportunity for an impulse, maybe a final impulse, right, to the downside, where we would, in my opinion, attempt to catch a major support. We're in the middle of nowhere right now. Okay, so either buyers need to come in and create a bottom, or just historically speaking, we're in the middle of nowhere and we would still expect to the downside. What could have created a bottom here and what can still create a bottom here is if the Fed starts leaking information that maybe they are going to come in sooner than later with some stimulative cuts, then I think we would just immediately get a breakout. Just the markets would go crazy because it's such a negative atmosphere right now. Any very good news on liquidity is probably just going to push the market into its last hurrah. Okay, it's going to do that dead cat bounce thing where things just go crazy. Oftentimes you get blow off tops on that type of a news as everyone just tries to make their last profit before the end of the market. But we have to understand, this was a 6 to 8 month process here. We're really only in, because this was basically a higher high right here. We're really just in like about our second month here. And so if we do have to put in a couple more months sideways, maybe sideways and down, it's really par for the course. Even if we go back here, right, even the bottom of the market, we kind of, this was like we were on empty in terms of money. And so, this was basically sideways and up because it was the kickstart of the market, right? But even that took, 1, 2, 3, 4, 5 months really to get off the ground. And you can consider half of the bottom too, right? So 6 months there, 6 to 8 months here. And, maybe we have a little bit more time, right? Maybe we have a little bit more time we need to put in on this bottom. And that's perfectly fine. In terms of our bullish setups that we were setting up at the bottom right here at this spike where we did get that bounce off the 300 MA, okay, and had the potential to squeeze up and break out through that 200 daily squeeze, right? We wanted to make sure that we were positioned just in case that happened. We can go ahead and take a look at Sol, and you can see that Sol did, the setup that I gave in the group. Sol did effectively hit every target that I set up there. And so some of these coins which have been reliable during this market, just boom, boom, boom. And then even my extension, boom, right? We hit all of our targets. And what did we do? We got a rejection, right, on Bitcoin. And we got some bad news in the markets with the tariffs. And so it sent us all the way back, which is pretty normal. But that's why you want to be taking your profit on the way up. And, it looks like this is having an ABC correction, and maybe we're going to get some type of a first wave for another grind to the upside. So, if the market does stabilize here, maybe there is room for some type of a bullish price action coming up. Let me take a look at what our RSI is doing, and we're attempting to make a little bit of a high up here. So that's good news. Basically we're holding above the bearish control zone on the 12-hour, and on the daily. So, you know, really there's nothing to say about that until we're back above this kind of 130 point and getting back above that daily 21. But you can pay attention to this to see if a bottom starts forming here. Maybe we can hit very similar targets. On Pepe, again, I had a small trade, and then, you know, if the Fed steps in and does something, you know, I was prepared for this last hurrah on the market. But in terms of our targets there, this was our realistic pattern target for the first setup. I did have that extension drawn out. We hit all of our extensions, and we in fact overthrew it. Again, guys, I always remind you, this is recorded, by the way, M&M, so others can watch it, which is why I'm talking this way. But if you have any questions, feel free to put it in the chat. Yeah, you know, we overthrew our expectations, and then we're coming back down into my bigger structure here, where I was hoping that the Trump tariffs would not be as harsh as they are, and I was hoping that the Fed would come in around this time and say, look, you know, the tariffs, they were just Trump's negotiation tactic. We were worried about inflation, you know, being sticky, but we can see that inflation is coming down because the tariffs are being negotiated away. And because of that, we're able to cut interest rates in order to protect jobs and prevent a recession. And then this market would have just gone crazy, right? But as it happens, you know, maybe we're going to be looking for a little bit more downward. Maybe we're going to be looking at some lower levels. And I don't consider this play, right? This kind of blow off a top, this dead cat bounce, this, you know, last hurrah of the market. I don't consider this play necessarily in motion, but you can see that my levels at least were valid. And we did get a little bit of a bounce here of 15%. And again, as long as the market remains kind of, you know, bearish, right? It's a bear market on the QQQ right now, right? So SPY hasn't joined yet, so I can't really call an official bear market. There could be a little bit of shenanigans at the bottom. We could get some bounces. But, you know, it's a little bit wait and see right now. And so as long as we're underneath those type of conditions, I really wouldn't be expecting us to get big bounces. And what I just advise you guys is to take profit whenever you can on 5%, 10% bounces and stack them up, stack them up, stack them up, right? If you put like, you know, 10% in your pocket, you have way more to put in the next time, right? And I strongly think that in these type of downward trends, if you get bounces of 25 to 35%, just friggin' take some profit, like a huge chunk of profit. You can leave the moon bags. Let's see. We've got a question. No worries. Would you mind giving a quick summary on your thoughts on the timeline of price action this summer? You said dead cat bounce over a V-shaped recovery. Yeah. So, you know, if we go back here and we take a look at this big structure, okay, this structure and this structure are basically identical. And what you can see here is that this is also a broadening descending wedge, okay? 1, 2, 3, 4, 5, 6, 7, 8, you know, and a half, right? So basically 9 bounces until we actually broke out of this thing. If we go into this one right here, we have effectively 1, 2, 3, 4, 5, 6, 7, 8, and we're kind of working on that 9th one, right? So wherever we end up dropping to, wherever we're kind of working on that 9th one. And it's just funny that we're playing around with those 200 daily EMAs and that 300 daily EMA, pardon me, MA in this case. Pretty much the same as we did at the bottom here. So, you know, again, markets tend to be superstitious. They tend to appreciate fractals because oftentimes they have nothing else to go by. And if we are going to show more strength on BTC, right, Bitcoin, than we are showing in stocks, because stocks are going to have less earnings, But BTC can potentially replace the weakening dollar or be seen as some type of gold-like figure, right? At least there's some portion of the market that believes that. The other portion of the market, which I think is the majority of the market, just see it as a tech speculation stock, right? But there is a portion of the market that sees it as a dollar alternative. And so if the dollar continues to come down because of these tariffs and because of repression on the U.S. economy and maybe a little bit of slowdown heading into a Trump recession maybe in 2026, then a little bit more and more and more people might be taking just a gamble that Bitcoin is going to act like gold, and they could start to take nibbles, and we could just hold this floor. They could see that this pattern is pretty long in the tooth. 5 waves is pretty good for a pattern to complete. I can see as many as 9 waves being formed, but really 5 chunky waves. And so this pattern has been tested. It is a bullish pattern. And what I would be expecting is some type of a breakout, maybe a retest in this range, kind of months going sideways. If we do get some just really bad news at some point, maybe a flick down to that 70 to 60 area, where we're going to have to be very, very careful not to get stuck down there. We need that to be bought up right away. Let's say that this is the capitulation on the stock market, right? Then we need that to be bought up right away. And then potentially this type of a dead cat bounce, where the market hits a bottom, and let's just say they come out with tax cuts for everybody, right? Like especially the billionaires and the millionaires, the same thing that Trump did during his first thing. He just disproportionately gives those guys a lot of discounts. And just like they bought the bottom of the market in COVID, they'll buy the bottom of the stock market now, right? Because what else are they going to use their tax cuts for, right? They don't need money, right? They got everything that they want. And they're not going to invest in business if they're going to see a recession coming up, okay? So the only thing they're going to do is they're going to buy cheap companies, that's all. It's a classic thing. It's called stock buybacks. And, there's a big debate, when you give stimulus, should you have in the law, to prevent people from buying stocks with that stimulus, okay? And they rarely do it. But the reason why you might have that type of condition is so that they can put that money in the real economy. In other words, so that Joe Billionaire is forced to build a factory, right? He's forced to hire workers. He's forced to do something with his money as opposed to just buying companies while they're dirt cheap and, basically hyper enriching himself. If you're going to get something out of the U.S. Treasury and, bring it to all these billionaires, then force them to do something with it rather than just buying up everything and monopolizing the country the way that they've doubled their wealth, right, since COVID. So that's one philosophy, but I don't see that philosophy happening under Trump. That's not Trump's philosophy. He doesn't want his own hands bound that way. He doesn't want billionaires bound that way, his investors. His donors. And so what he wants to do is basically give them big tax cuts. And so when that tax plan goes through, sometime in summer, sometimes, heading into the fall, right, the country is going to be facing a credit crunch. Our short-term loans for the country are going to come due. We're going to have to refinance everything. And so what's going to happen is that Powell is going to have to make a decision to cut rates. He's going to have to make a decision to increase liquidity. And then also into the summer, the Congress, they can't just do patchwork, right, for the spending bills. They can't just do a temporary spending bill forever. They have to get the long-term stuff, the structural stuff in place. Otherwise, America can't do business. It's kind of embarrassing, right? Like we're halfway through 2025 and they don't even have the 2025 budget yet, right? That's embarrassing. So they can't do that, right? Our partners, right, that work with us on these things, they need some solid ground to walk on. And so you can do the little patchwork stuff until the Treasury runs out, until all the short-term loans need to be refinanced. Then you have to come together and get that bill, that spending bill for the entire year, the omnibus bill and all this, you have to get it done. And if that gets put together during summer and it includes big tax cuts, right, to billionaires, they're going to use that money to buy up stocks for cheap. If the Fed is also coming in and indicating, okay, some of the tariffs were negotiated away, so I guess we can do some cuts, right? Then they're going to add stimulus to the economy, and we can get this kind of just a big dead cat bounce, right? So this could be just like a pity bounce. What I would call this is a pity bounce, a breakout, and then we just test to see where the real low is after we broke that downtrend. We're showing a little bit of strength in this market. They may want to have a final shakeout, and then we go forward with the rest of the economy doing like a slight temporary recovery before the recession. And what could happen is then we just pump up, right? As the market pumps up, as these billionaires spend their tax cuts, as the economy kind of comes back to alive because of the band-aids that the spending bill has put on the economy, because of the band-aid that the Fed has done, then we can get, maybe at least back to that $90,000 area. It's super realistic. Maybe a half-hearted dead cat bounce is going to be like 105, and we just make a lower high. And then what happens is that this market just kind of slops over, right? It just slops over. And effectively, that's a head and shoulders, okay? Or, let's say that in that spending bill, they include something for crypto. They say like, okay, we're also going to start accumulating some crypto, or here we're going to do some, here's some like structural changes to crypto that make, DeFi really easy. Well, you could see Ethereum start to take the lead. Okay. And if Ethereum takes the lead, then what could happen is that we could have a speculative dead cat bounce, right? In other words, that the RSI, let's go to the weekly on the RSI. So if we zoom out here, the RSI could make a lower high, right? So it's showing that actually this market's done. It's cooked, right? This lower high off the top of our market at 110 or whatever, right? This showed that the market was cooked, okay? That's why I started to give out warnings and stuff, especially when we started to breach this neckline. We lost the bull zone. We were cooked. We got out of we're breaking out of the bull zone. We're making lower highs on these very high macro time frames. The best we're looking for is a dead cat bounce now into the end of the market. And if you look at the previous market, it's something like this, right? No problem. Total reset. Awesome. Let's go again, right? Okay. Total reset. No problem. Let's go again. Uh-oh. Lower high, lost the bull zone. Sorry, we're cooked, right? That was the top of 2021. And what happened? We went into the bear market, right? And then this was the bottom of the bear market. So, and we can go ahead and take a look at that price action right here, right? Right. And so even though this was a lower high on the RSI, right? It was a higher high in price action. But still, that was telling us we're cooked. We're done. Okay, we're done, right? And so any of these bounces that came next were actually pity bounces before the massive bear market. And so that's why this was the bounce to get out on. And that bounce was right here. Okay, right here. Now, we were under the 50% when we got that bounce, that pity bounce. Now, fast forward to our current cycle. Currently, we're holding this trend of the bull market. We could bounce and maybe, come back above the 50%, and that can take us back to the bull zone. If we go to my calculations here, where's the bull zone? It's somewhere around 100 and, let's just say 100,000. Okay, so we could easily see a bounce back up to 100,000. And then if we're rejected from the bull zone, that's going to be our pity bounce anywhere between that 90 to 100,000. That's going to be our pity bounce. And then we're going to get slapped down into a bear market. It's just going to be game over. But if they do something structurally different and we even stick our finger back into the bull zone, okay, this market is going to go wild. It's going to just go, oh my God, we're back in the bull zone on the weekly, okay? And this thing could have what's called just a blow off top. And we've seen that in other markets like this one. Okay, where there's lots of reasons to think that this was cooked early on, but you know, basically you can see this collapse here, massive collapse, you know, right here, and then bounced up and made a higher high, right? Just like this was a double top basically, but a higher high here, and then this bounce right here, this was actually a bounce of 65%. Okay. This bounce here was a bounce of 98%, which is a huge bounce for Bitcoin, okay? So what was that on the last cycle, right? It was basically this thing. And that was a bounce of, you know, 138%, right? So, you know, I'm not 100% convinced that this was our double top formation. I think this was just the top of a little local area, right? Just like this little top right here. And I do think that we could be making a low that could potentially do one of these, you know, just if we have a blow off top, right? Let's just take it from this low right here, where 50% brings us back to our previous highs, where 100% brings us to 150K, okay? And then that's essentially the range that we could be looking at, okay? I wouldn't be looking, you know, here on a weekly calculation. I think that over 170 is pretty much impossible. Like anything that you got over 170, you better just sell that. Realistic, right, in a blow off top is 120. And then if we don't get a blow off top, if we just get kind of a pity bounce, then we're looking at anything up to 100K. Okay, assuming that we hold this level. If we break down, then all of these calculations get reset. I hope I answered your question there. And if you have any other questions about it, please let me know. Now, we don't have to get this breakdown. I'm just saying that if stocks continue to break down, or if we go months sideways and we just wear out our welcome in this range, and you know, we don't get any really good news or anything, and the market just kind of capitulates, then this would be the discount area. You see this? This is the bear zone on the weekly, and that's where billionaires like to buy. They like to buy in the bear zone. They don't like to buy at the neutral point. Okay? And they're looking at this weekly structure. They're looking at big swing positions to take, and they're saying, you know, bull zone is where I like to sell. Neutral point, I don't really take a position, but bear zone, I like to buy. Okay, so retail could come in here. Like if we get good news for retail, the Fed cuts rates, we get some little tax cuts or a stimmy check or something like weird, you know, that just brings money in. The tariffs go away and retail just wakes up. We can get that squeeze to the upside just with retail FOMO. Okay, but if this market just continues to be squeezed to death by tariffs and there's no Congress budget, or worse, the government has a shutdown, right when the debt is due, that could cause us to lose a level. Yeah, you understand? So we're in a very sensitive area right here. And again, guys, like this is why when we had this structure here and everything was going in our favor, I was strongly emphasizing to you that this is the position this is the place to take our positions. Okay. And why I said 90K was too rich for my blood. You can see that was the breakdown point, right? And this was our breakout point. So, you know, even if you just captured this area, you did really well for that leg up. Okay. And then, of course, we were also talking back here when we got in on this entry, but that was a long time ago. Probably people don't remember that one. They're always going to say, "What are you doing for me today?" Right? Like, what are you doing for me today, Sky? So let's go ahead and just get rid of this. And I think I was one of the only, you know, handful of guys, you know, even on AR's recording, I was saying, like, we're back in a bull market. We're back in a bull market down here. Why? Because that 21 EMA is really reliable. And we were super oversold. And I knew that this was going to be a bull market. I did not know it was going to be a bull market almost exclusively for Bitcoin and meme coins. I did not know that that was the angle that the market was going to take. But this was looking to be setting up for a massive squeeze here on the weekly between that 200 EMA and the 21 EMA. Man, that squeeze was all you needed to know to get in on this market. And, right now, because we're so high up, we have to look at the same thing. But basically, we're looking for that 21 daily squeeze now with the 200 EMA to see if now that 21 EMA has come down enough, can we scoop up some price action on a breakout with the 200 EMA? And, we're not going to get an epic bull run because it's not a daily, it's not a weekly squeeze, but can we get like a daily squeeze and get some type of juice out of this market? Maybe a cool, one as well, right? But we're going to try to get something out of this if we get that squeeze. But as long as we're under that 200 daily EMA, again, as long as we're under the 21 daily EMA and both, so we're under both of them, this thing can still kill over. All right. Yeah. Let's go ahead and, just see how some of those altcoins are doing in our secondary setups. So I showed you Sol. We hit all of my marks. We can talk about a new entry, but it's just a little bit early for that. Pepe was a degen play. So again, for the degen plays, sometimes these things can go crazy. So I had a setup here. We achieved 42% off of that setup. Now we're coming back to my entry. Again, crypto is showing a little bit more strength than the stock market. If the stock market ends up bottoming around that 20% and then having kind of a pity bounce, crypto could also run at the same time, right? If the news about tariffs starts coming in, oh, like this country is lowering tariffs, that country is lowering tariffs, all these countries are lowering tariffs, then we could start to get a run. And so, my secondary entry hit 15%. We're up a little bit more on that. We had an entry zone here for hype. We're still in that harmonic retrace area. So this is still, if these harmonics are going to be valid, this is still the area that you'd be looking for on that harmonic retrace with some bullish divergence. And we're in a good bear zone here on the daily, which means it's a good value area. Okay. And so I'd be starting to look for potential opportunities just in case over the next few years, just in case over the next few weeks that the news about tariffs ends up becoming better and better and better as countries start to, negotiate maybe, right? Let's take a look at Wall on MiCA. Okay, so MiCA, the walrus. Okay, yeah, this chart looks good. It looks nice. This has a bullish structure. It is a very short chart, and so there's not much to say about it. But basically, you have a slightly higher high, not on a closing basis, which is unfortunate here on the 4 hour, because the 4 hours where you get your price action. But on the daily, you do. So, which one do I put more stock in? I'm not going to fade this one. I'm not going to fade this one as long as it's above this wick back here on the daily, as long as it's above 55 cents. I'm not going to fade it. Yeah, because that was its major drop point, okay, on the daily here. So I'll just go ahead and put like a little line there. You can see we obviously got a bounce off of this wick and off of the highs here. So I'm going to just make a little zone right there. And this is not actually strong support, but I'm going to give it the dark color because there's not much price action here. And then you can see that we bounced off of this level and we did not actually end up capitulating on this candle right here. So we actually bought up this old bear candle and we flipped it. So this is going to be bullish. Now, where's our next level of resistance? Right here and right here. Those ones slapped us down very hard. Right, so that 60 to kind of 61 cents area. And then you can see that at 58, we had some struggles. Let's pop back down to the 4 hour and see if this makes sense. Yep, this lower boundary right here lines up with that wick. So I am going to drop it just a hair down. maybe to 60 cents flat. And then you can see that we did sort of fall off the cliff here, right? So let's go ahead and, you know, we did have a couple points of resistance right here. We do have a little bit of a pivot right here where I can put in a, like a weak kind of gray area. There we go. Yeah, this level's not perfect, but my point here is that you can see that we're going to bump our head into this little area right here. We're going to bump our head off on that, and this resulted in a downward, and it also resulted in an upward. So this is a pivot. You're about to bump your head into a pivot that could pull us back, and on an even shorter time frame, like the 1 hour, you know, you might do something like this, right? And if you do, that's going to be a good sign. You're just going to pull back into that 21 EMA on the hourly, and then maybe you're going to continue to kind of grind out this area, right? And then this is going to be your little limit. And then this one could get sent all the way back down. You have no idea. It's still going to be a higher low, right? And this is just going to be a bigger, like, you know, inverse head and shoulders that, you know, often there's some type of shenanigans, and then, you know, bull flags and breaks out eventually. If you're going to remain bullish, you're going to flip that area, right? But this could be a little bit of a grind. So I don't know if you're up on this or what, but you might want to take some profits at some of those levels. Up to you. But you know my philosophy on these when we're in a bear trend overall. Additionally, because you did just set in a new high, just remember that this thing might want to slop over. And if you do get rejected here, I think you can start taking a look at this on the 4 hour, just because of how this thing grinded up on the 21 EMA. If it continues to break under the 21 EMA, like if that's just a deviation, just kind of faking people out, or just like enthusiasm on whatever today's bounce, and it does get back under that 21 EMA, just I would probably be out of the market there and just waiting for it to recapture it, because you know, this thing could come all the way back down. So, you know, where do we bounce down here? You know, we've got like kind of a little level here. We do have this pivot right here. This was a nice bounce right here and right here. So that was a good little impulsive area. But it was kind of, it was halfway, so it's not really a strong one. We don't know if we'd catch ourselves there. Let's see, this was a little pivot area here, but very difficult to see. We broke down there, and that's where we bounced off here. This was also a little pivot area, We bounced here, we broke down here. Yeah, I'll give it there. I'll give it that one. Maybe a little bit more there. Yeah, so this is very tough because it's a very short time frame chart. But if you wanted just some key levels just to help orient yourself, okay, there you go. You can take a screenshot of that and basically use those levels, and you can see that this is a hidden bullish divergence right here that can take us, you know, towards our top. Hidden bull is a little bit weak. This is hidden bear, and that can take us back towards our lows, but hidden bear is also kind of weak. So I don't know if it's necessarily going to break down just because it has hidden bear, but I would expect some type of a pullback. And if you lose this gray bar, you know, just watch out below. If you hold that gray bar, as long as you're above the 21 EMA on the hourly, you know, you can continue to play that up. Because look at what happened before, right? Maybe you're going to continue to follow the 21 EMA to the upside there. You're sidelined and want to trade this in the meantime. Multiple 10% gains, like you said. Yeah. So this is your range, right? And you can see it back here. Boom, boom, right? Boom, 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 right? So if you're able to grab a position in the lower 1/3, then you're going to take some profit in this upper 1/3, right? and you just don't want to lose that 21 EMA. You can kind of use it as your bull support area, right, on the 1 hour. So anything like this could be your opportunity for this next move. You lose it, well, you just cut your losses. You're under the 21 EMA. Right? And then where does this trend look like it's going? Maybe here, right? You know, maybe down here. Right? And then this is your next big opportunity down here. This is an indecision wedge. On the 4 hour, just because of these closures are lower than these closures. And so if I wanted to just, you know, give this like a 4 hour look to it and just kind of ignore the 1 hour wicks, you know, I'd be looking at these trend lines right here. And, you know, maybe something like this. These are kind of your buffer zones where it looks like my math is checking out. Okay, so again, I programmed this indicator myself over here, and this 60 cents, that's probably where you're breaking out. If on the 4 hour chart, you can see that you're busting above that 60 cents, putting in price action there above this wick, above this zone we established. You're probably breaking out. Maybe you're headed to 70. I don't know. It's going to be basically a clean breakout. I don't know about this wick back here. Just ignore that wick. But you're getting a blue sky breakout. I have no idea where it could go. We could take a volatility wave projection and just do a range duplication. Just kind of like stupid level stuff. And maybe you could get up to 75, 80. Okay. But I'd be a little bit humble on that just because it's a new chart. And also what I'd be aware of is that in indecision wedges, sometimes you get this, it's a deviation, and you come back down. Okay, so whatever side it breaks out first, oftentimes that's a fake out. It's a fake out, shake out before the real breakout. Okay, and this is also possible. This is like your big range. Okay. You know, this is your big range. And so your best opportunity is actually down here, right? Which we missed, right? We missed. But if you get that again, that's your best opportunity. You know, but is this thing rolling over in that case? Or does it continue to accumulate off of higher lows and, you know, makes like a big accumulation wedge? You know, with a massive, massive breakout, you know, to 80 cents. Yeah, this could be a potential opportunity down here, but we're, you know, that's just a concept that we're using right now. Currently, we're pointed in the upward direction. And if you get that breakout above 60 cents, you know, or a pullback into this 21 EMA on the 4 hour, right? Above that 50 cents, that's your opportunity in this range. And then you're going to probably want to sell there. If you flip it and make a higher low, you can use some of your profits to make a moon bag, or you can just leave a moon bag, right? And to see if it breaks out. But in this formation, I strongly advise sometimes there's a fake out. Okay, sometimes there's a fake out. Doesn't have to happen, but sometimes there is. you know, 1 hour has much stronger structure, and the daily actually looks pretty interesting. That looks like a bull flaggy kind of thing. But it's pathetically small. That bull flag also goes up to 70 cents. So, you know, do I trust this or not? I don't know. But yeah, I mean, that would be a bull flag breakout, right? Couple different perspectives. Anyway, you know, the only reason we use these type of patterns is to manage risk, right? We manage risk. So again, like you can take a screenshot on that and you can just manage your risk on the 4 hour if you're 4 hour trading based on this stuff. The 21 EMA gives you a little guideline, right? And then these levels are kind of like little tips based on math. And then our support and resistance is where prior buyers and sellers existed. So, you know, they can always pull their orders. They don't have to exist there forever, right? They can change their order levels, but oftentimes they just leave them there. We are above the 50% on the daily, on the 4 hour, headed back towards the bull zone. But you can see that we do have the opportunity for a big bearish divergence there. So we do have to get significantly higher. I think unless we break that 60 cent, this is just going to be, you know, if we close in that 60 cent area off of these candles, then this 4 hour is going to have like a big bearish divergence. So just watch out. And then we're going to see this type of a structure. Yeah, a little deviation to the downside, but, you know, something like that. Maybe something like that, you know. Head and shoulders here. Okay. Sui, you know, it's basically holding my range for the potential breakout. It's interesting how it's accumulating here sideways. We did not drop down into my deep discount target yet. We got about 20% off of our play. Then I started giving warnings about the market. We got about 10% off of Ondo before I gave warnings of the market. We did hit our realistic pattern target, and now we're coming into our secondary setup. Still holding pretty well, to be honest. We got about 35% on IMX before I started to give warnings on taking profit. And we've just gotten stopped out if you round tripped it for whatever reason. LDO, we got a nice 12%. We did not hit my target, so it underperformed. This was a massive structure, and it should have performed much better. So that was a very weak performance by LDO. And it rapidly got stopped out, and it actually came into the second structure. We have not seen strength yet on the charts, right, on Bitcoin. Not officially. We haven't broken out of the downtrend or anything, even though some of these altcoins have broken out of their downtrend. So we're still waiting for strength to come back to Bitcoin, really, for us to like make these secondary plays work. But you can see, you know, we did essentially hit this target. We did get wicked out. This is just an idea for a deeper area. I'm still open-minded to this one coming down lower. But we'll see. This was only a 2% risk off of that play. So, you know, just... you know, it might be valid now off of that low, but I'd still want to see it put in more structure. So I'm not doing the secondary plays. I'm only doing the first plays, and then I'm waiting for strength to come back in the market for these secondary plays. And if we have to adjust them higher, fine. For INJ, you know, if we were gonna get a breakout, it had to be there. We got a 16% play. And then I mentioned to you guys that the market was looking weak. And yeah, we just came back, and this is where I'd be stopped out here. Now, do we get a breakout on INJ? I don't know, but this is an interesting area. We could very easily have much deeper pullbacks because INJ has like the biggest harmonic. Okay, so the pullback off of that harmonic, the type 2 reaction could be severe. Aave, again, it's one of these coins just tied to Ethereum. We got a nice 12% run off of it. It did break out. It hit our realistic pattern target. Nice 12% play. But again, the weakness came into the market. Now we're coming into my deep discount area. And, we're going to wait for some strength. I'm not calling these secondary ones just yet, but they are ideas that are on the table. Morpho, same thing. We got a 24% play. We hit my realistic target almost to the T, which was awesome. I did start calling for weakness in the market and to skim some profits. And you can see that we just had a massive retrace with this stock market and the tariff crap, right? And now we're trying to put some strength, interestingly, right at where my secondary play was set up. So these are definitely ideas that are still valid. It's just, we want to see a little bit more strength come to the market. We don't buy falling knives in my philosophy. We buy on strength. So until I see that strength, I'm not really going to be calling the secondary plays. Arrow was particularly weak. It did literally nothing at the first one. You could have been up like 5% or something. 3.6%. So this was the stinker. We probably would have been, by the time I called the market as being bearish, this one would have been net zero basically, but that was the stinker for sure. Easily to have been stopped out. Yeah. So, guys, again, this is recorded. So just I remind you that I primarily do request. I interact with you through the Friday sessions. If you guys don't show up, then that's up to you. But I always try to make a time on Fridays. I move it around a little bit so that people, so that different people can have different opportunities to ask questions. If there's a preferred time for you, you guys can drop me, a note, right? You can drop me a note in the members main chat. But I don't follow these trades that I give setups on the way that the trading hub does. If you guys want trades that are just like, they've been hitting it out of the ballpark. You got to make sure that you're checking out the trading hub. A lot of those have just been killer plays. And if you wanted to really stack your money and just make that, 10%, 10%, 10%, these guys are doing that 25 to 35% over and over and over again. They're at least doing 5 to 10% over and over and over and over and over again. And that's just way better than anything that you're going to get in a bank account. So please make sure that you're taking a look at least at what's going on in the trading hub. You don't have to use their leverage. You don't have to use their leverage, Eminem. Okay, you just have to use their setups, right? So, for example, if we go to the P&L section really quick, and you can see that obviously, recovery just made 1,000% play using 50x, right? Well, what's 1,039% divided by 50, right? That's a 20% move that he captured on spot. Okay. That was a 20% spot play. All right. Now recovery mostly does like the higher end leverage stuff. And some of these guys are just like getting 2%, on like a certain leverage and stuff. But we have the spot sections. Okay. We have the spot sections in the trading hub, the mid to high cap spot plays. And you can see that Delta hits them up every once in a while. I'm not sure why recovery is putting his leverage plays in there every once in a while. I think that was just an error on his part. Maybe that's just a one-time. But in general, Delta's been giving some nice setups. And you can look at Saltware also. So I'm not saying like it's perfect. I'm not saying that, if you don't use a little bit of leverage in this market, when times are a little bit repressive, that you're not going to, that you're going to get the numbers that you're looking for. It's not going to be easy, right? Like that's why people are using leverage in these type of markets. These are leveraged markets. That's what crypto is based on, is leveraged markets. But you can take a look at some of the spot play areas, and you can also take a look at the leveraged trades and just not use leverage and just control your risk. And if they run, they run. If they don't, they don't. But the setups they're giving are pretty valid. And if their targets aren't the same target that you would have, then you can ignore it. I am trying to give my own setups as well. The point that I'm trying to make here is that, if you do feel like you can do that stuff on your own, then feel free to check out the Trading Hub. When we're just going sideways forever, we're just kind of contracting in volatility, the way that BTC is just, contracting. There's not a lot of money to be made in that. So, that's where the leverage guys are going to have a little bit of an advantage. But at the same time, we have these massive liquidation events. So you can just pay attention to what I'm talking about on the macro. If you want to build up your swing plays, this was a good area for swing play. You can see we're now at the top 1/3. That was a good swing play, right? Those were the trades that I just went over. Those were very awesome trades. All of those were spot. They were between 10 to, almost 50% spot plays. Okay, and I gave a bunch of them. And Reddit is also giving them. So it's up to your skill level, but if you can handle a little bit of leverage, the Trading Hub is just knocking it out of the park. They do give setups that do pay off on spot every once in a while. But the point that I was trying to really make was that if you need some more hand holding, please make sure to use the request a coin feature. And again, guys, like you can ask me like 10 times on the same coin. It's not like you just asked once and it's done forever. Okay. The whole point of paying the subscription is so that, yeah, look, if we're in something, we see something nice, and a couple guys start getting into it, man, we can take a look at it every day, right? We can take a look at it every day. I don't get bored of taking a look at looking at your request, right? So let's say that, for example, Eminem likes Walrus, right? And we just took a look at Walrus. Well, man, ask me as many times as you want about it. That could be the pet. That could be the pet trade, right? That we take up as a group. And if you guys don't act that way as a group, right? If you guys don't try to feed off of each other's energy, if you guys don't try to, support each other's setups when you see something good, and do follow-up questions and give insights, then how are you going to be successful as a group? You can just follow whatever Reddit says, but being a follower, it doesn't always pay off the way that you hope it would. Okay, being active and engaged and asking questions and being there is really important. Even if it's just 15 minutes a day. 15 minutes a day is plenty to be successful in these markets. You don't need to spend hours and hours the way that Red and I do. You just need 15 minutes a day. Just drop your charts and say, yeah, I'm in this one. What do you think about it? And then a bunch of other guys are going to start getting in on it. We're going to get excited about it. It's going to build up energy. And we're going to make some coins our pets to be following that are doing good. So I'm not going to be talking about Arrow, for example, right? This isn't the one. All right, this is a falling knife chart. It has a lot of potential, but until it shows strength, this is not the one. But that Walrus looked really interesting. This FART coin, right? Like, man, I gave a setup that did 140%, and I think not a single member actually engaged on it. Engage. So this isn't directed to you, Eminem. It's just directed to anyone who wants to get something out of this market. it's not like we couldn't have gotten something out of this market. I put this in the request a coin section, right? And no one even requested it. I just dropped it there. And yeah, so please engage. There are opportunities that you can double your money or more just on a spot swing. And this was just March 17th. Okay. You could have doubled your money in this market just in the last 2 weeks. Just, you know, you have to engage. You have to be in the thing that the market is in. And you can't just buy what you want to go up. You know, you have to buy what the market is in, what the market is supporting, what's showing strength. Yeah, I think I'm going to wrap it up there. We went over a lot of altcoins. We went over Jerome Powell. BTC just continues to grind into this downtrend. And again, above 86.5, I'm looking at this thing for a potential bullish breakout where I don't care how high it goes above 86.5. Okay, I want it to close above 86.5 and then have a bullish retest of the breakout, and then I want it to get over 89. That's going to be enough of an uptrend for me to start taking a chance on this market. We're going to be very close to resistance, so we're not going to be taking too much of a risk unless we flip that 90s area. But I'm going to be seeing that as a good sign that we're changing our momentum from a downtrend to a potential bottoming formation that may want an uptrend. Until we get that breakout, and until we confirm above 89K, or until we validate above that 86.5, okay, where we start turning our EMAs to the upside, our daily EMAs are still pointed down. 21 EMA pointed down. 200 daily EMA is rounding to the downside, and we are still in danger of just slopping over. So this short setup is our hedge, because, you know, I gave some long positions, right? But our hedge on Bitcoin is still to the downside just in case, all right? But that's just if you need a hedge. And again, even on short plays, guys, you don't have to use leverage. You can still use, 1x, right? You don't have to use leverage. It's just 1x short, right? You don't have to use 50x short. You can use a 1x short. I don't know if it's necessarily worth it on BTC to be using 1x. But I think BTC is a lot more reliable than some of these altcoins. And if you guys are going to experiment with leverage, BTC is a great coin to experiment with leverage on. You can do it on Coinbase now, and you can do like 3 to 5x and get the same type of moves as an altcoin, right? So like if this was a 15% swing on Bitcoin and you just did 3x, then you got a 45% move, and it's just a 3x, right? It's not like, you're probably not going to liquidate yourself as long as you control your risk. And you don't just let it ride, you have stop losses and stuff. All right, guys, that's your alpha for the day. There's your, free alpha Fridays. So thanks for joining, and I hope you guys just become a little bit more engaged, and that we can kind of pick up some pet coins as we find a bottom on the market. If we continue to impulse to the downside, we're still going to be on that watch for a critical low where we can pick up our coins. But there are some interesting setups starting to be presented. We do have to be open-minded that maybe we had the max bad news, and that maybe we can look forward now to tariffs slowly starting to be removed, to the Congress passing a spending bill, which may have some interesting things for crypto in it. And it also may have tax cuts, which, could be stimulative for those who want to buy the bottom of the market, which, in other words, it could help form the bottom of the market. And then within a couple months, the Fed may decide that they want to release liquidity, that they want to cut interest rates, and that could be additionally stimulative. And so we could still be looking towards a good end of the year, even if right now it looks bleak. even if we can project maybe recessions in 2026, 2027, right? We still want to be optimistic towards the end of the year, based upon perhaps max fear having come into the market. Now, the worst case situation is that, these tariffs are sticky and we have a government shutdown and, businesses aren't able to adjust to it. And we just have to be aware that that is the risk that we face. But no risk, no reward. So again, guys, that's your out for the day. Stay safe and happy trading.